Say, I think a key theme there is literally like don't be a sheep, don't follow the crowd. Is whenever you do anything, do your own research, your due diligence before jumping into anything that anyone says.
So hello everybody. Today we're going to be talking about investment strategies, and we want to just put a disclaimer out there to advise that we are not any type of gurus or strategical advisors that have made billions. So please take this as just a thought process that we have. Us four have different skills and experiences in investment strategies. So when listening to this video, obviously take it with your own thought process behind it. We just want to put that out there before someone goes ahead and follows the strategies that we put in place. But we're going to be talking about 5 strategies in this session. Probably want to start off with one that I believe is the most important, which would be investing in yourself. If you're not investing in yourself in terms of money and time, so I'm not just talking about investing in money, we're talking about investing in time as well, then that would be one of the places where I personally would want to start. And I just want to put it out to the boys and how you think about that, and where would you suggest people invest themselves in?
I started I didn't really have a process, to be honest. I just kind of looked to the future and figured out, right, what's going to be around in 5, 10, 15 years time, what jobs will still be there, what skills will be needed. And I sort of just reverse engineered that sort of thought process and went from there. And it led me to AI, artificial intelligence. Started reading loads of articles about it, and I just had a massive interest in AI in general, and AI is here to stay. What I am good at is learning things anyway, just dipping my head into a subject and immersing myself in that world and taking as much knowledge as I can from that. And that for me is like that's an investment. But in terms of really developing your time to get something out of it, you got to think about, one, what makes you happy. You got to enjoy it. You have to have an interest in it, and you got to want to be able to learn about it. So I decided to go and learn how to code, and it just started off by reading articles, and I was trying to teach myself how to do it. And then I found some courses online, very cheap courses. I paid about £10 on, I think it was Udemy. I think that's how you say it. And I started doing this coding course, and what I learned in such a short space of time was incredible. In terms of knowing what the right thing is, it's like any investment really. You'll never know if you've made the right investment. If you invest in the stock market, you won't know that this is a guaranteed winner. You won't know that you're going to get money out of it 100%. You need to be specific with what value you want to get out of what you're investing in.
I think you've hit 2 really important points in your own experience of your journey. And the first one is reverse engineering where we're going to be in the next 10, 20, 30, 50 years. And I think that's more important today than it was at any time looking back in history, because we're going through a day and age where technology is changing every single day, and it's going through that kind of exponential growth. And if you're not looking to how times are changing, and especially what sort of jobs and skills are going to be required in the next 20, 30, 50 years, and you're just looking at kind of older jobs that you may have an interest in, they may not exist, right? So I think reverse engineering is extremely important. The second thing I think you're doing really well at demonstrating is just having that learning mindset. Just having that mindset to say that I'm open to accepting and learning new things, I think is a key thing somebody needs to take on board if they're looking to invest in themselves, and accept the fact that you're not going to be the best. None of us, like we said at the start, are experts in our field. We're all trying to learn and improve ourselves every single day. So for me, those are the 2 best things and things that I agree with in terms of what you said.
And I think it even comes down to the point as why I feel it's most important is because if you don't invest in yourself first about learning about them investments, then you're wasting your time. So time investment, money investment, I'm sure as we go through the other 4 investments that we're looking at today, a lot of us have had investments in ourselves to learn about them investments first. We didn't just see that investment and go, oh yeah, I'm just going to do that. And it was all fairies after that. We had to spend time, we had to spend money to better ourselves in that environment first before we went and invested our money. So it's the fundamental for me, and I'm sure for the rest of us too, it's the fundamental investment that you have to make before you can make any other investments. Let's talk about the stock market, and Sanj, you have a heavy experience in the stock market. So or why don't you give us a little bit of background on stocks trading, investing, long-term investment, short-term investment, stuff like that?
So I've been, for everybody watching, I've been a big fan of investing. Me personally, I have an interest sway towards the foreign exchange markets, but the stock market is just as popular, just as much opportunity in there. For me, my big reasons behind it are I have a big interest in trying to make my money work for me, right? So the basic principle that most people follow is that they exchange their time to do a certain skill in exchange for a paycheck. My philosophy is that I don't want to have to exchange my time for money, because if that's how you make your money, you're going to be doing that for the rest of your life. So the key is to learn how to use your money, multiply it, and make more money from that. I think if you're looking into stocks, you kind of need to do your research and do long-term planning as to where you're looking to get involved in. A couple of things, kind of tips that I would throw out there for people looking to get involved in kind of longer-term stocks. I would look into a concept they call dollar cost averaging. So it's something that I've spoken to a few of you guys about, especially with the recent corrections in the stock market. If you are looking to be getting involved in the stock market, you want to be averaging in your position and not just dumping all your money in one go. Hypothetical example, if you're looking to buy a stock at, say, £10, instead of buying and putting all your money in at £10, you want to buy it in certain chunks, right? And at certain times as the stock price fluctuates. So for example, if you buy 100 shares at £10, and as the price fluctuates, maybe it goes up, maybe it goes down, you buy another 100 shares at £5. So now you've got 100 shares at £10, 100 shares at £5. Your average price lies somewhere in the middle. So in this case, £7.50. So you're better off with an average price of £7.50 than a full price of £10 if your longer term outlook is that the stock price will inevitably go up. So I think dollar cost averaging is a super important concept, and it's all about investing your money in small chunks over a long period of time. The flip side of this is trading, which is personally what I'm into more, which is investing probably in a shorter time scale, looking to maybe get in and out within a certain hour, day, week, month, quarter, potentially. Depends completely on your investment strategy. But trading in particular, you have kind of one main job, which is to outperform long-term buy and hold stocks. So typically, for example, the S&P 500 is going to return anywhere from kind of 7 to 10%, which has been its record over the last 40, 50 years that it's been trading. So generally, if you're going to be looking to actively take positions, open and close within a shorter time frame, you want your investment strategy to pay out more than 7 to 10% annually. If you're not able to perform at that level, then you're better off just putting your money in a buy and hold investment over a longer period of time and using your time more effectively elsewhere. Have you guys had much experience in that, or anything else that you want to kind of add?
Yeah, I've done a bit of stock trading as well, and I think I'm a firm believer in sort of diversification. Even when you're delving into stocks. So like my two ways of doing it, and people have different strategies. So like Sanj, yourself, you do trading actively, so that's you hands-on. But there's also the approach of using a managed fund and using a fund manager. So again, the key theme of these investments is obviously splitting your money across a various set of basket of instruments. So FX, equity, bonds. So the more spread out your money is, the lower risk you have of any sort of market risk. There's kind of two ways you can do it. You can either pick the stocks yourself, so that obviously requires a lot of research to do into that. You kind of need to know what you're doing as well. But there's also the concept of managed funds, and there's a lot of funds out there, and a lot of fintech companies that have started up. So sort of like your Nutmeg and Moneybox and all these kind of investment funds. I think the key thing to look at when picking one of these managed funds is obviously the admin fee behind it, and what the portfolio managers take as a percentage for managing whatever money you put in there. But it's a great way to get into investing in terms of even in the short term sense of where you don't have enough capital to maybe dump it into another investment. So we'll probably come on to later, like property, for example, for you to build up that income so you could get a deposit money. While you do that, it's better to put your money into a fund rather than sit in a bank account and earn less than 1%. Because with inflation, you're essentially losing money then. But obviously, yes, it requires research.
I have a question. Like, what about So there's a lot of these new fintech companies, as you mentioned. Moneybox, I think that's the one where it invests whatever change you have, or I think it rounds up whatever you buy to the nearest pound and invest the rest of it. There's things like Trading 212, and I've seen some people like commenting on these sort of these trading apps without actually having any clue of how they work. But they've heard someone's made money. They've heard someone's made a bit of money on Bitcoin. They've heard these instances, these stories, and then they just sink all their money in it and then don't really know how it works. Is that a good thing or a bad thing?
I think 100% a bad thing. I think Jamie touched on that earlier, and it's like, you know, we can talk about and recommend certain things that we personally are into, but it has to start with investing in yourself and getting your own education as to what you're investing in. Know the market you're getting into. You need to know your risk, your upside, your downside. You need to know all that stuff, and that stuff only you can find out for yourself. I think on that same topic, FOMO is real. The fear of missing out, especially in today's world, it's real, right? And so many people get sucked into these things because they heard about other people making money. And just because somebody has made money in a certain market, it doesn't mean it's for you. And investing is a very personal thing, and you have to believe in it yourself. And just because somebody else is doing it, it doesn't make it the right thing necessarily.
Yeah, I was just going to say, I think a key theme there is literally like, don't be a sheep, don't follow the crowd. Is whenever you do anything, do your own research, your due diligence before jumping into anything that anyone says. You should know what you're getting into. That's the only way you can sort of be sure. Everything carries a risk. There is always unknowns, but the whole point is to educate yourself as much as you can on whatever you're trying to get involved in. And that's the key element for anything in life, really.
Yep. I'd say that's a perfect segue to move on to the next segment, as everyone has the notion of investing in real estate is the way, the safest way to invest your money. The standpoint of investing would be to invest in real estate, which I think we all believe in as well. Jay Powell, you have a lot of experience in investing in some real estate, so do you want to just give us some background on that and how you would recommend it to people looking to invest?
Yeah. So I think, again, I think the key theme with investment is always you're looking at long term and short term. There's loads of different strategies out there, and you kind of have to figure out what strategy works for you. So, like a simple thing for whenever you're trying to get into property might be just looking at rental returns, and not focusing too much on capital appreciation. In that sense that you're just looking to buy a property with X amount deposit and seeing what monthly returns you get. And the bonus is of the capital appreciation. Then there's other people looking at more long-term investments and care less about what they're getting on a month-to-month basis and more care about what the property value would look like in 5 or 10 years' time. So again, with these strategies, there's always that short term, long term. So when you're looking at the short term, you are generally looking at the rental returns. And when you're looking at the long term, you're looking at the capital appreciation. Again, it's very much, and key theme with this is educating yourself with what you're comfortable with. I would always recommend whenever investing in property, always pick an area you're comfortable with and an area you know. That's always the best strategy to follow, because if you do start going into the unknowns, there are unknowns. You don't know how property prices will move. You don't know how the areas have progressed, what is in the area, what is the key investments to make in that area. So again, you can educate yourself, but I always stick to what I know.
Yeah, and there's a point where sort of stocks meet real estate with the REITs that we have nowadays. That's a new sort of, I would say, solid investment in my personal opinion, because obviously real estate is a good, safe investment, and being a part of it rather than just having a whole load, you can still have a small part of it by investing in REITs. For those who don't know about REITs, it's basically a real estate investment sort of trust or fund where you can invest some of your money into it, and that company will then use that money from, let's say, the thousands of investors that they have, and go and buy properties and manage those properties. And then the money obviously comes back from rental units or buying and selling different real estate properties. So like I said before, it's sort of like a trust fund or sort of a trading fund for real estate management companies. So if you want to do some investing in that, because maybe you don't have enough capital to get real estate yourself, definitely go and get some advice or get some education on that yourself. and maybe that might be something that you want to look into.
So there are REITs that you could do here as well. So it's more like shared property buying and stuff. But again, it is very blurred lines. I think there's a lot less regulation on that side of the market than there is anywhere else. Again, I haven't personally done it. I've kind of stayed away from doing anything with an investment with someone else just because I feel more comfortable being in something myself. But in the future, it is something I would really look into because I think that's the next step is obviously doing those bigger investments, and obviously there's always finite capital you can raise and gain yourself, and is sometimes beneficial being part of a REIT or setting up some sort of fund as well for investments.
When it comes to actually buying property, what would you advise? Would you advise someone to go and prioritize the JPAL you mentioned earlier, those regular but smaller income goals, so rent, for example, or would you recommend someone prioritize the long term, like the big payday? Because I remember reading the 4-Hour Work Week, and I know it's not about property per se, but in terms of lifestyle design, Tim Ferriss suggested that prioritize those mini paydays, the regular mini paydays, above that one big payday that's all the way down in the future. Would you say that the same applies in the sense that one needs to be prioritized in real estate?
Again, I'd say it's massively based on your strategy. What are you trying to achieve, right? So like if you're looking for the bigger payday, that means you're kind of looking for a longer term investment. You're looking to hold your money, and then you don't really need access to those funds in the short term, that is. So my strategy when I was doing this, and this isn't that I prefer this over the other one, is just purely I was looking at rental returns because my idea was to create a snowball effect. So to use the rental income that comes in to invest into another property and then have two rental incomes, and that will end up being a snowball effect. And that money will start rolling. So I'll be buying more and more properties. So in 1 year, I'll buy one property. In the second year, hopefully could buy two, third year, four. And if I could double that effect with the income coming in, that's what I saw more beneficial and having more growth potential than me investing heavily into one property and hoping that it was going to pay out. That was too risky for me. Again, level of risk that I wanted to take. I'm more risk adverse so I wouldn't jump into something like that and dump all my money into one place and hope for that big payday. So again, matters on what your strategy is and what's your risk appetite.
The reason I ask, because most people in the UK anyway, the situation for them would be that they've just saved up enough for a deposit. They're going to put that deposit down, and they've bought a house for themselves, or they've bought a house for their partner, with their partner, and they're living in their investment. So the only thing they can rely on is that long-term strategy, where they hope that one day when they sell, they will get a bit of money back in the long run, as opposed to no one's really in that position. There's very few people who are able to sort of, or you're one of them, you're able to buy that property and then rent it out. And you're actually, for me, you're killing two birds with one stone, because you're getting the rent every month, and then you have the upside of also selling it down the line later on. So that's short-term and long-term investment paying off for you.
Yeah, I think this is another debate as well.
Yeah.
Oh yeah, 100%.
Property and you live in it, is that really an investment?
Yes or not? Yeah, exactly.
It's not, because really for you to cash in on that investment, you're gonna have to
be homeless.
downsize.
Downsize, you have to be homeless, bro.
If
If you downsize all your capital gains, you just lost that anyway. So you have to be homeless, especially with the house price gains. That's my opinion. But I think we'll do a debate on that another day.
Factor to consider with properties that it's in a very illiquid investment. It's not something that you can just instantly cash out and see those returns, especially in the case that you brought up, where if you live in that property. It's something that you generally will see on paper, and most people will keep that money tied up in a house and use it to buy a bigger house, for example. So it really depends. So I think liquidity is something that you want to consider when you're picking your investment vehicle as well. And I think something that J-Pal touched on as well is risk appetite. Knowing where you're comfortable is also quite important. But yeah, it's a very independent thing. There's no black or white when it comes to investing. There's always that shade of grey, and it always depends on the person. So.
Yeah, I want to move on to one that's really close to real estate, in fact, and it's quite new to the scene, something that I've been heavily involved with, and some of the guys on the call have been looking into as well, which is digital real estate, which is what I like to call it. So a lot of people have decided to now invest their money in digital assets, which include cash flowing websites. So as an example of that, I own one of my own cash flowing websites, and I sort of bought it just sort of like a real estate. But the difference between buying real estate and buying a cash flowing website is the expenses, obviously a lot less. It doesn't cost as much to buy. The return is very high. So right now, talking about 2019, it's sort of about times 30 principle. So the monthly income from that website, you times that by 30, and that'll be the cost of the website. So I'll give you a plain example. It'll be $1,000 a month that the website is making by profit. You times that by 30, the website should cost around 30,000, depending on many other factors as well. Again, get yourself educated in it. But there's a very good website that I'll recommend to you guys called empireflippers.com. They have a lot of information there, podcasts, blogs and stuff. And there's actually a marketplace on there for these investments as well. So again, very similar to how the real estate market works. There's a listing of these websites, businesses. It has all the information, the profit loss statements, all of this digital asset sort of things that you need to be aware of. And yeah, you sort of would put a deposit down, and you'd buy the website, and then now that becomes yours. The ownership gets transferred to you. The cash flow that was coming in beforehand now gets transferred to you as well, and you've bought straight off the bat a cash flowing website. It's something that a lot of people have been looking into recently. It's becoming quite on fire over the web. So let's say when I first started looking into it was 2 years ago, and the multiple at that time was times 25. So not only do you get that cash flow that's coming in, you also get an appreciating asset as well. So now let's say I bought a website 2 years ago, the multiple would have been times 25. So if it was earning 1,000 a month, it would have been 25,000. Now 2 years later, the multiples are on average around times 30. So I've made $5,000 from just holding it, let alone all the profit that it's been bringing in each and every month from the sales that it's made. So definitely something to look into for people that are more web savvy and want to look into owning assets online. It's obviously a lot cheaper than real estate, but the risks are always there. You have to get knowledgeable. You have to invest in yourself, invest in your time. I know a lot of us is talking about online real estate, online investments. A lot of people in the US are actually pulling out some of their money from other investments and putting it into cash flow websites instead. It all depends on your risk adversity and what you want to accomplish from your investment strategy. So, any of you guys have any comments or involvement in website businesses or thoughts on it?
No personal involvement from my side, but obviously had a keen interest and following your journey along, obviously. But I think it's just another great example of the kind of going back to step one, which was invest in yourself and kind of reverse engineering, just like Jamie mentioned at the start, as to where the times are going. And I think as you phrased it perfectly, this is like digital real estate, and everything nowadays is online. And I think it's such a great market to be getting into, especially in this time when it's currently blowing up. So anybody that hasn't already heard of it, something to definitely look into. I think Jamie did mention the website that he personally uses himself as well. So we'll drop all the links below as well. So for you guys check it out and do your own research.
Definitely. One more I want to mention is incomestore.com as well. These are more for, and I believe there's going to be more companies like this over time. They actually take your investment and they will build the website or buy it. They'll manage it completely for you and grow it without any of your involvement, right? And you still get paid the profit. Now they do split the profit with you, so I believe it's a 50-50 split, but still it's a huge investment and it's a great returns. It's better returns than most investments that you're going to see. Again, I'm not trying to sell this to anyone. It's just something to take a look at, and if you're interested in it, definitely check it out. So incomestore.com. Check that one out. I believe that they have a criteria if you want to invest 50,000 or more. But yeah, so that's kind of wrapping it up on the 4 strategies that we have. So let's move on to strategy number 5, which would be crowdfunding. Crowdfunding investments been around for a long time now. Something that you can definitely get involved in with a smaller amount of money or a larger amount of money, depending on how much you want to get involved in. But again, it's investing in yourself. Take some time to know what the good opportunities are. I know that Sanjay's been invested in a couple. Do you want to take us through sort of what you did?
Yeah, so I had I used primarily, I've been through one website, which is Cedars. Again, I'll leave a link below, but there are a few quite popular crowdfunding websites. I think Indiegogo, Crowdcube, all kind of look to do the same sort of thing. And these places primarily specialize in looking for companies that are primarily startups and just need investment to kind of get off the ground. They're I would say, a great way to be getting into potentially a very big company from the ground level up, and you can go in with a really small investment. For example, I know Cedars personally, you can go in with something as small as £10. They have kind of their whole investment strategy up there, but they have their pitch, they have their investment plan. You get to kind of read all that before you want to, if you decide to take the plunge with any given company. So I made a couple of investments 2 to 3 years ago. Again, they have a bit of they're more long-term investments. I wouldn't say they're liquid. My money's kind of tied up in these for the coming few years. The one kind of disclaimer that I would give about this is they are very risky. So again, it boils down to your risk appetite, as we've kind of mentioned throughout the course of this video. As with anything, if you're going to invest into something, you want to make sure it's money that you can afford to lose. But yeah, I had a couple of companies that I stumbled across which made sense to me in terms of the timing of the market, the kind of product and service that they were bringing out. And I chose to get involved. There are a lot of other benefits in terms of things like tax as well. A lot of these startup companies, they go through this scheme called the EIS, the Enterprise Investment Scheme, I believe it is, and you can actually claim tax back from your income tax if you place investments through this. So again, it's the government's way of kind of encouraging people to get involved in these companies and helping them obviously raise some money and get some great products and services off the ground. So I will leave a couple of links to below if anyone wants to do their own research.
There's other things that you could get involved with. So rather than startup companies, there's also like something like Funding Circle, which provides loans out to companies and to other startups as well. So that's something I'm involved in as well. So again, starts off with small investments, like you could start off with £500, and again, you can manage your risk appetite, and you can see how your money is being invested, sort of who's it being lent out to, what the type of return looks like. But again, a key thing is that you have to be open to there being losses as well. So and again, everything matters on sort of risk appetite whenever getting involved with these kind of funding vehicles, really.
Touching back on the crowdfunding stuff, I know over here in Canada there's peer-to-peer lending that's becoming very popular as well. I'm not too sure whether it's available in the UK, but you could be a peer-to-peer lender as well. That's something that's available in the markets to put some money in, and then it gets lent out via the peer-to-peer company, and it gets lent out to small businesses or even to personal loans as well, and people put their mortgages as sort of backups to what they're lending against. So there are some other investments that people look at when it comes to crowdfunding. So peer-to-peer investments would be something that you might want to take a look at as well.
We're doing this primarily just to kind of expand your vision of view. And, I think properties are the main investment vehicle that most people throw around as to what you should be getting into. And it's not the only thing out there. I think that's kind of our main message for the day.
I was just going to add and say, just don't put all your eggs in one basket. It's such an old school saying, It's true in every sense. Just don't sink all your money into one investment and just bank on that paying off. That's probably my final word.
But I think we covered the 5 main investment strategies that we try to all use. And as you can see, all of us sort of have different views. All of us are invested in different things, but that does not mean that we are solely invested in that purpose. Exactly what Jamie was saying. We are looking to dive into other people's investment strategies. That's why one of the main reasons why we have this mastermind group. So we all have different areas that we're invested in, and we are trying to move into all of them. But you got to start somewhere and then start to branch out. We will share some of the links below to what we've educated ourselves on and what we've spoken about today. But please leave a comment below, and we want to just have a final disclaimer to say that we are not experts in these fields. So please take this information and go and do your own due diligence before you start investing yourself. But Other than that, like, share, comment, and we'll see you next time.